When it comes to managing a family office, there are certain key performance indicators, KPIs, that you absolutely need to track. If you're serious about preserving your wealth for future generations, keeping a close eye on these metrics is essential. In this video, I'm going to share the key KPIs every family office should track to ensure your investments are performing at their peak. And I'll show you why a gold IRA could be the best strategy for your portfolio. But before we dive in, if you're serious about protecting your wealth in the next 2 weeks, I highly recommend you click the first link in the description below to get a free gold IRA guide. Thousands of Americans are opening gold IRAs right now to safeguard their retirement savings, and you'll want to get ahead of the game. Now let's get into the KPIs. First, one of the most critical factors to monitor is your portfolio's performance versus benchmarks. This sounds basic, but tracking how well your investments are doing relative to market indices or specific asset classes is crucial. Are you beating the market? Is your wealth growing at a sustainable rate? If your portfolio isn't performing as expected, it might be time to look at alternatives like a gold IRA, which historically outperforms other asset classes during times of inflation or market uncertainty. Next up, liquidity. Family offices often have substantial holdings in less liquid assets like real estate, private equity, or other long-term investments. But having liquidity when you need it is a key component of financial health. Tracking liquidity helps ensure you can access cash when emergencies arise or when new investment opportunities present themselves. This is where something like a gold IRA can come into play. Gold is a highly liquid asset that can be converted to cash relatively quickly when you need it, making it a strong backup to other investments that might not be as easily sold. Another critical KPI is asset allocation. Is your family office's wealth too concentrated in one type of asset? Diversification is key to reducing risk. Keeping a close eye on how much of your portfolio is tied to equities, bonds, real estate, or commodities is crucial. And when we're talking about commodities, gold should absolutely be part of that mix. Gold not only offers a hedge against inflation, but also helps stabilize a portfolio that could be too dependent on volatile stock markets or low interest rate environments. Then, you've got to track your costs and fees. Family offices sometimes overlook this, especially when working with multiple managers or funds, but high fees can eat away at returns over time. Reviewing your management fees, transaction costs, and performance-based fees can help you identify areas where you could be saving. The less you pay in fees, the more money stays in your pocket, and that can be particularly important for wealthy retirees who need every dollar to last. Lastly, let's talk about risk management. Every family office should have a clear risk management strategy, and tracking how well you're mitigating risks is key. Are you overexposed to certain sectors or regions? Are you diversified enough to weather an economic downturn? If you're looking for a safe way to diversify and reduce exposure to the risk of inflation, gold is one of the best options you can add to your portfolio. It's an asset that tends to hold or increase in value, especially when other markets are underperforming. At the end of the day, by tracking these KPIs, performance, liquidity, asset allocation, costs, and risk management, you'll be able to ensure that your family office is running as efficiently as possible. And if you're not already including gold in your portfolio, now might be the time to consider it. If you want to learn more about protecting your wealth, especially if you have $100K or more in an IRA or 401K, or even if you're sitting on 5M plus in savings, click the first link in the description for a free gold IRA guide. Thousands of Americans are already turning to gold to safeguard their wealth. Don't wait. Click the link now and take action to secure your financial future.